Hello, Michael. It's really a pleasure to be interviewing you today. So I won't waste time of the interview just introducing yourself. I think for a Bitcoin conference, you don't need introduction. So maybe you want to send some short message to Argentina, to this big conference, to LABITCONF, and to everyone listening to you in Buenos Aires.
Well, first, I'm sorry I couldn't be there. I wish I could, and thank you for coming to the conference to support Bitcoin. Second, everyone in Argentina is an inspiration for me. Many of my personal heroes in the Bitcoin space are Argentinian, and they've told me their stories. And when I hear the stories of Argentina, when I study the history of Argentina, over every 20 years, there's been a currency crisis, and Bitcoin wasn't there 20 years ago and 40 years ago and 80 years ago, but now Bitcoin is here. My personal experience in Argentina has had a profound impact on me. I lived through a currency crisis in Argentina about 20 years ago, and what I learned from Argentina is the world would be a lot better place if everyone had the option to store some amount of their wealth and their financial assets in a global, non-sovereign, store of value digital asset that was more than a commodity. It was a scarcity, something that no one can create any more of. If you could put your financial wealth into something where you don't rely on a person, a CEO, or a bank, or a company, or a country, or a regulator, if you had the ability to put your money in a bank in cyberspace run by incorruptible software, that would have alleviated a lot of pain in Argentina over the past 100 years, but it would alleviate a lot of pain everywhere in the U.S. If you study the monetary history of the U.S., the U.S. has the same stories. It's just that we have them in 1650, 1690, 1750, 1780, and we whitewash them out of our history. We don't remember them. But the U.S. has the same stories of currency collapse. Every country in Africa, every country in South America, every country in Asia. And so, the story of Bitcoin, or the hope of Bitcoin, is the hope for a better future for everybody, and ultimately everyone in the world that suffers, at the hands of a bank that freezes their assets or a currency that collapses because the government prints too much money. And I think my inspiration from Bitcoin is two things. One, the network itself is so decentralized at this point that we don't need banks anymore, and we can move money on Bitcoin rails, and we can move money on Lightning rails, and that is hope for Lebanon or Turkey or Argentina or Brazil or Venezuela or fill in the blank everywhere on Earth. And so the idea that there's a monetary network that runs based upon $20 billion worth of Bitcoin mining equipment spread everywhere on Earth, every part of the grid, and no one can shut it down. If you turned off half of it, it would still keep working. I think that's incredibly inspirational. You don't have to place your life in the hands of a bank that may or may not give you your money back. And I think the second source of inspiration and hope for me is that the asset itself, Bitcoin, it's not just a commodity. A commodity is an asset without an issuer. That means it's ethical to distribute it. It's better than a security. But it's more than a commodity because it's a scarcity. Bitcoin is a commodity you can't make any more of. It's better than gold. It's better than oil. It's better than land. There's 21 million blocks of it. There'll never be more than 21 million Bitcoin. So Bitcoin, the asset, offers the apex monetary asset, the most perfect money of the human race, the best commodity you could own, the best property you could hold, something you could reasonably buy some and expect to give it to your great-great-grandchildren in 100 years, even if you don't know where they're going to live. But you have that reasonable expectation with Bitcoin. I don't have it with any other property or any other asset. There's nothing else I could recommend to you that would be a good investment 100 years from now for your family. So the asset is inspirational as the world's first scarcity. And the network itself is inspirational because it offers economic freedom and sovereignty to 8 billion people, even when you don't believe or don't have faith in the company, the bank, the government, or whatever your circumstances, and they're changing everywhere. So my message to everybody in Argentina is thank you for supporting Bitcoin. Understand that people that are true believers in Bitcoin, we're not speculators. We're not doing it to make $1 in 12 weeks or 12 months. We're doing it because a decade from now, it seems like it's the best idea, and 100 years from now, it's the only idea. And if we can usher in a world where 8 billion people in the palm of their hand have economic empowerment to trade with anybody else on the planet on a fair and equitable basis without being interrupted by a bank or censored by a government, and if they have the power to hold their life force, their life savings in their hand or in their head, and no one can take it away or steal it from them, then that's a better world, and that's a world worth pursuing, even if you have to accept short-term pain to get to that world. And I think that's what the Bitcoin believers are pursuing, an instrument of economic empowerment. If you study the history of money for 10,000 years, every money's been defective, every type of money's been defective, and every currency has failed. And it wasn't until 2009 that you had a non-defective money, and it wasn't until now that you had a hope for a currency that won't fail you. And so this is an exciting inflection point in human history. This is something worth supporting. It's, do it because it's the right thing to do. If you want, otherwise do it because there really isn't a better idea. I mean, we can't find a better idea. My company spent $4 billion on it because we looked at every other idea. We couldn't find a better idea for the human race or for our corporation or for our shareholders. And so I'm a believer, and every single person that joins the Bitcoin cause makes the network better.
So while doing the research, your first public appearance about Bitcoin was July 2020. Could you please describe the process from like nothing to the most influential people in the Bitcoin community in, 2 years, which is something, in my opinion, absolutely impressive?
Yeah, well, I think in July of 2020, we were at a crossroads because we had a large amount of cash generating 0% interest. And we had no prospect of generating interest on it. And we saw massive inflation coming because of the pandemic lockdown. So we could anticipate hyperinflation because interest rates went to zero. We were printing money. The money side was expanding. And we saw the inflation first in the assets. And we knew that eventually it would come into other costs. And so we were concerned for the company. We didn't know what to do. So we decided that we either would just give all the cash back to the shareholders, like do a massive buyback, or we needed to invest in something that would actually appreciate in value as the money supply expanded. So we needed to find a scarce, desirable asset. So in July of 2020, we announced to our shareholders that we were going to do our search, and we were going to consider investing in property or gold or securities or crypto assets. And we also announced that we were going to buy back a large portion of our stock over the next 12 months. It was a $250 million asset purchase and a $250 million stock buyback. And we had $500 million in the treasury. So about a week later, we announced that we had done the asset analysis and we considered everything. We could have bought gold, we could have bought silver, we could have bought S&P index or something, but we concluded that we should buy a crypto asset, and then we sifted through thousands of them, and we concluded that Bitcoin was the equivalent of digital gold. It was the king crypto commodity, the scarcest asset, the hardest to inflate, and the most decentralized and distributed. So the safest. And so we announced we were buying $250 million of that. And we also announced a Dutch auction where we're going to buy back $250 million worth of our stock over the next few weeks. And we put that out to the marketplace and we waited. And that was August 11th. We announced that. And then by September 10th or so, the Dutch auction finished, and many of our shareholders didn't want to tender their shares. we offered to buy them at a premium. Our stock was trading like 120, 122, and we offered to buy them out at 140. But the stock traded above that. Most of the stock wasn't tendered, and so we ended up with $175 million of extra cash. And at that point, we adopted Bitcoin as our primary treasury asset, and so we invested the $175 million of additional cash into Bitcoin. So by September 11th, we had invested $425 million into Bitcoin. And from that point forward, a lot of the people in the world started to discover they had the same problem. They were looking for a non-sovereign store of value asset. When you look around, you think, well, either gold, but gold was like the best idea in the 19th century, or digital gold, which is Bitcoin, the best idea in the 21st century, or you don't do anything. So as people started to pile in to crypto assets and they discovered Bitcoin, Bitcoin's price started to rise. Our stock started to rise. We were able to raise another $650 million in a convertible offering at a 398 strike price. Put this in perspective, our stock was $120 a share when we started. And so the next offering was 398, so not quite a factor of 4, but 3.5 more. And so we took that and we bought Bitcoin with it, and things continued, and eventually we were able to raise another $1 billion in $1.05 billion in a convertible offering where we had 0% interest, and the strike price on that was $1,400+ a share. So that was incredibly compelling. Then crypto goes through these cycles, and Bitcoin traded down, and so then we didn't want to sell equity or do a convert, so we actually raised $500 million in a senior secured debt offering, and we invested that into Bitcoin. And then Bitcoin traded back up again, and our stock traded up again, and we announced a $1 billion at the money equity offering, a shelf registration, and we sold $1 billion of equity. And then we bought Bitcoin with that. And then the stock traded down, and we had all this unpledged Bitcoin. And so then we borrowed $200 million against the Bitcoin in the first Bitcoin-backed loan to be used to buy Bitcoin. And then we bought some more. And so all through and then along the way, we were always buying Bitcoin with our cash flows. And the company generates a substantial amount of cash every year. So when all was said and done, the company had invested approximately $4 billion in Bitcoin, and we became the largest public holder of Bitcoin in the world. And so that's our journey.
Maybe right now the majority of the brains and the hands are not in the Bitcoin blockchain, but in the Ethereum, because they are building things on smart contracts, DeFi, and so forth. So my question is, do you think that it's okay for Bitcoin to lack a smart contracts infrastructure? Or maybe Bitcoin has somehow missed the innovation boat there? Or do you think we need a smart contract infrastructure? How do you envision in the future the ability to unlock innovation within the Bitcoin world, I would say, the same way the Ethereum-like virtual machines have unlocked?
I think that Bitcoin has moved forward in a more conservative fashion in order to not break anything. And the idea is to make sure that the first layer is rock solid. I mean, I can look at you right now and say I would put $4 billion on the Bitcoin base layer and hold it for 100 years, and I have no fear because it's all done. On the other hand, Ethereum's been very technically ambitious, but there's a 5-stage roadmap, the splurge and the verge and the surge and the scourge, and it's going to take a decade before they actually get to the point where you can evaluate it to say, well, how stable is it? So it's a very different philosophy. I think that the philosophy of Bitcoin is the first layer is all about security and integrity for the next 100 years, maybe for the next 1,000 years. Satoshi said, by version 0.1, the genetic code of Bitcoin was set, right? That was very important. The functionality and the performance in the Bitcoin ecosystem that I think is responsible needs to come on layer 2 and layer 3s. And so there is an explosion now of innovation in layer 2s and layer 3s. If you look at Lightning development, there are hundreds of companies that are investing in Lightning. My own company is now working on enterprise applications for Lightning, and it's an approach to deliver marketing and sales and security applications for the enterprise. It used to be people were just focused upon Lightning wallets for payments, but you know there are applications like Keat where people are building Lightning into communications and Zoom and podcasting and authentication and digital identity. I know there are a lot of Bitcoiners that are still working on smart contract infrastructures based on Lightning. And the Taro protocol is really a focus on putting all digital assets on Lightning, especially moving things like Tether or Circle or any other kind of stable coin on Lightning. So I would say, Bitcoin is moving in a more progressive or a thoughtful fashion, a careful fashion, where we want to make sure that we don't break anything. And it's more of a layered approach where we recognize that some functionality should be built into the proprietary custodial app, and some functionality should be built into the Lightning layer. If you break your Lightning channel, right, you might lose a few $1,000s, but you won't lose billions or trillions of dollars. So the idea is don't wreck the world while you're trying to improve the world. And there's an explosion in VC and investment in layer 2 and layer 3 apps on top of Bitcoin now. I think you'll see more of them. This entire crypto winter has kind of underscored for people that there's certain instabilities in creating a new token for every new type of functionality. The most stable approach to adding functionality is if you must have a gas token, you use Satoshis. Satoshis in Bitcoin is the gas token. That is ethical. That is ethically sound, economically sound, and technically sound. And if you can, you build a layer 3 proprietary application, and there are 100,000 of them, and you build it into that because there are a lot. I'm not the kind of person that says we shouldn't have companies. There's a place for companies. We need retailers. There's a place for banks. There's a place for all sorts of organizations. So ultimately, we will have companies. We will have channel protocols like Lightning. And all we need is the underlying base protocol of Bitcoin to be secure. If you can put $1 trillion on it, you can put $100 trillion on it. It doesn't need to move fast. It doesn't need to be functional. The granite underneath Manhattan is 200 million years old. It has not moved in 200 million years. And it doesn't undermine the value of the city. The city is valuable because of the things we build on top of the granite. The buildings last 100 years. The companies last 10 years. The people come in to those companies for a few hours. So you see the frequency of the layer 2, the layer 3, the layer 4 is much higher. The duration is lower. It is foolish to try to build airplanes of granite or ships of granite. But it's also foolish to try to build a skyscraper on top of sand or cotton candy or balsa wood. So you have to pick the right material for the right thing. And I think right now the Bitcoin community has the right architectural approach. Its layer 1 is meant to last forever and be indestructible. Layer 2 is open, permissionless, and neutral, and cross-border, and channel-based with gas that is Satoshis. And layer 3 is a proprietary functional application like Google Pay or Apple Pay or Microsoft, an operating system, Windows, and that's the future. If you want to give 8 billion people the functionality, the performance, and the integrity in an open, permissionless, ethical fashion. And also, you needed to jump through the regulatory hoops. If you want to be compliant with the money transfer rules in the United States, you're going to need to have layer 3 functionality. And so, if you try to do it on layer 1, Like, for example, you may have noticed all the DeFi protocols are now under pressure to be KYC'd and AML'd and regulated in the US. So if you had the idea that you were going to deliver this as a layer 1 protocol, you're going to get shut down in the United States. If you want it to last, you need to actually deliver the protocol as a Lightning app, because the token is Bitcoin, which is permissionless and censorship resistant. The openness comes from the Lightning libraries, and the functionality comes from the layer 3 applications built into the website or the application by a company. You're going to have to, and the company has to exist somewhere. Monaco, UAE, London, US, Buenos Aires, right? You're not going to be able to launch a company with people on a satellite or floating in a ship in the middle of the ocean. It's a romantic vision, but it's not practical.
Michael, thank you so much for your time. Until the next time.
Thanks for having me. All the best.